Hi everyone, welcome to another video. Last week's the S&P 500 has been slowly trending downwards. In this time period I sold out of my position in Apple and JP Morgan. In my opinion, both ran up too much and were overvalued at the moment. Next to that I could use some cash to buy dips and take advantage of a potential correction in the market. In this video I will do an analysis of Kulicke and Soffa Industries, ticker symbol KLIK. If you like this kind of content, leave a comment down below and of course don't forget to subscribe. If you are new to investing, check out my link below the video and get a free share when you open up an account with Buck0. Best way to learn is by actually starting to invest. So let's get straight into the video. The company that we are talking about today, where you might not have heard of before, is one of the fastest growing semiconductor stocks at the moment. This company is my way of playing the chip shortage. You might think that growth means the company has a high PE ratio, but fortunately for us it's not. If we look at the peers of KLIK, we can see that most companies have a pretty high PE ratio. There's only one company that has a lower PE, and that is Daqo New Energy. I made a video about this company last time if you want to check that out. We have to look for a reason why this company has a low valuation, and maybe we can take advantage of this if the risk is not too big. First, let's look what the company does. Kulicke & Soffa is a leading provider of semiconductor and electronic assembly solutions serving the global automotive, consumer, communications, computing and industrial markets. KLIK is around for a long time, already since 1951. So first of all, this company is not speculative. They have a well-established business. We can see their business is well diversified and spread around different sectors. KLIK said they have meaningful growth opportunities. They are doing a comeback in their core market. Next to the core market, they are expanding three relative new markets: advanced packaging, aftermarket products and services, and last one, mini and micro LED. Later in the video, we will also discuss the fundamentals of the company and see if there is strength or not. A very important point when you're looking at a company, and for sure a growth company, is the TAM, or total addressable market. This is the total revenue a company can earn if there are no competitors and the company is available in the whole world. ASML, the biggest company in this business, had a revenue of 14 billion in 2020. So there is still some revenue left to take. KLIK has a lot of adjacent opportunities they are looking in to expand their pie of the cake, which is good for a growth company if the R&D costs do not run up too high. This graph shows us the growth of the semiconductor industry till 2025, published by VLSI Research. VLSI is a well-known research company in the semiconductor sector. On this graph we see there is immense growth ahead in the next years to come, so this is very good news for our company. The serviceable addressable market has also been increasing the last years. This is the segment of the TAM within your geographical reach that you can target with your products or service. KLIK is planning to obtain this growth through organic development, acquisitions and R&D investments. The projection of revenue for the end of this year is $1.5 billion, higher than ever before, and they expect the multi-year industry expansion to continue. KLIK's fastest growing market is advanced display. They expect mini and micro LED wafer production to grow by 200% through 2025. Last year's sales growth was 700%. To keep on growing in this segment, they have made an acquisition of Unicarta, which will support the fast-growing advanced display market. Acquisitions are not always good and can cause debt. KLIK seems to have anticipated this and said it has no meaningful impact on the operating expense model. What I really like about this company is that they are delivering value to their shareholders. KLIK does this by buying back shares, which causes your shares to go up in value since there are less shares outstanding. They are also paying out a pretty decent dividend. In the latest quarter, KLIK made a record in revenue. The revenue increased 25% from last quarter. Their earnings per share by at least 48%. So this shows us how fast this company is growing. We now have a better picture of what the company is doing and how they are performing. So let's take a look at the balance sheet to see if the company does not have too many debt and can pay off its bills. The current assets are almost $1.2 billion. The current liabilities are only $300 million. So they can easily pay off all the short-term bills. Kulicke has a total debt of only $21 million, which they can pay off with the free cash flow of last quarter. With this company, you also don't have to worry about raising interest rates on loans because they have so little in debt. This balance sheet is very healthy and can withstand the crisis. So far, everything is looking pretty good. To decide if we want to buy this company right now, it's important that we look at the current valuation to check if we are not paying too much for the company. The current PE ratio is 17, which is pretty low considering how fast Kulicke is growing in the latest quarters. A PEG ratio of 0.03 is again amazing and similar to DQ's PEG. Like in the beginning of the video, we see that Kulicke is better valued than other peers in the sector. The growth numbers we already looked at in the presentation, so we know the numbers are pretty good and outpacing the sector median by a big margin. Considering the available growth in the sector, this growth might be sustainable for the following 5 years. In the numbers of profitability, we can see that Kulicke's 5-year average numbers are similar to what the sector median's numbers were this year. So Kulicke is for sure doing much better lately. Now let's talk about the possible risks and why Kulicke might be valued a bit lower than other companies. In 2019, Kulicke's revenue went down by around 40% and the earnings were decreasing from 2017 till 2019. So I went into the annual report of Kulicke and see what happened in 2019 and see if the company had an explanation. You can find this report if you type in the company name and investor relations behind it. This is the annual report of 2019. In here, Kulicke explains that revenue was lower due to lower volume and unfavorable pricing. Customers were investing less, which led to uncertainties, and competition made prices go down by a lot. When reading this, I thought maybe other companies would have similar problems, so I compared the revenue of Kulicke with the revenue of ASML and saw the revenue dipped at similar time periods. Of course, revenue of ASML is more stable because it's the largest company in this space and will be less volatile. So overall, I don't see big problems for this company going forward. In the annual reports, I also found this interesting section, the customers of Kulicke. The customers include some well-known and fast-growing companies like Tesla, Micron Technology, and ST Microelectronics. Tesla is having a chip shortage with its vehicles, so maybe this will drive more revenue for Kulicke in the following quarters. How am I approaching Kulicke? The stock directly ran up a lot when I've started buying the first shares, but even at this valuation I think you can't do wrong by buying it, given the growth that is still left in the sector. I would like to make Kulicke a €1,000 position as soon as possible. In my opinion, more and more everyday products will need chips and someone will need to make them. This was everything for today. Thanks for watching. Subscribe and smash the like button if you enjoyed the video. If you have any questions, leave them down below in the comment section or send me an email. Below the video you can find the link to Book Zero where you can get a free share when you top up your account. Take care and see you in the next video.